All right, today we're diving into the story of an absolute giant at a crossroads. We're talking about Delta Airlines. They've spent years building this incredible fortress in the sky, but now a perfect storm is brewing on the horizon. The big question is, will their defenses actually hold? Let's get into it.
So let's set the scene. Go back to the beginning of 2026. Delta wasn't just, another airline. They were the undisputed financial king of the entire U.S. industry. They had this business model that every single one of their competitors was jealous of, but just couldn't seem to copy. And then, seemingly out of nowhere, a crisis thousands of miles away sent these massive shockwaves through the global economy and landed right on Delta's doorstep. Yeah, that conflict in Iran pushed oil prices through the roof. We're talking Brent crude soaring past $113 a barrel. Now, for you and me, that's a headline. For Delta, that's a sudden $400 million hole blown straight into their yearly budget. This right here, this is the ultimate stress test. Okay, so to really get why this is such a huge deal, we first need to understand the fortress Delta built for itself. We've got to look at what made them the absolute best in the business. It really all starts with just pure market dominance. Holding almost a quarter of the entire U.S. domestic market is huge. It means they get the best real estate at airports, they get priority for gates, for landing slots, and they have a network so dense, especially out of their fortress hub in Atlanta, that for millions of people, Delta is basically the only real choice. And of course, that dominance translates into just staggering profits. $5 billion in net income for 2025. But what's really wild is that this was a nearly 45% jump from the year before, even after absorbing massive pay raises for their pilots. They were literally firing on all cylinders. But this is Delta's secret weapon. Get this. The airline makes more money from its American Express credit card deal than a lot of other airlines make in total. We're talking over $8 billion a year, with an estimated profit margin of 80%. You could almost argue this loyalty program is more important to Delta's bottom line than its airplanes are. It's just incredible. This right here shows a massive strategic pivot. For the first time ever, they made more money selling first and business class seats than they did from the entire economy cabin combined. They transformed themselves from just another airline into a premium travel brand, which helps insulate them from all those nasty fare wars with budget carriers. So what holds this all together? Well, analysts call it an operational moat. See, Delta is consistently ranked #1 for on-time performance. And that's not just about, good customer service. It's a real competitive advantage. It makes customers loyal enough to pay more. And that extra money funds the investments that keep them reliable in the first place. It's this powerful, self-reinforcing cycle of success. So with all that, the market share, the insane profits, the premium brand, Delta looks pretty much untouchable, right? Well, every fortress has its weaknesses. And it turns out, Delta has some pretty significant ones. For all those record profits, you have to remember the company is still carrying a mountain of debt from the pandemic. We're talking around $21 billion. That costs them over $1 billion a year just in interest payments, cash that could be going to new planes or paying down that debt even faster. And that operational moat we just talked about, it got breached. Big time. Now, to be clear, this was before the fuel crisis, back in July of 2024. A routine software update failed, and it triggered the absolute worst IT meltdown in the airline's history. Over 7,000 flights canceled, a $500 million price tag. It was just this brutal reminder that their sterling reputation was vulnerable to a single point of failure. And there's another challenge brewing right now. The 2023 pilot contract already added hundreds of millions in yearly costs. And guess what? That contract is up for renegotiation at the end of 2026. With a pilot shortage giving the union all the leverage, the next deal could easily tack on another $500 million to the annual payroll. Okay, so Delta isn't just sitting back and taking this. They are actively fighting a battle on multiple fronts, using every opportunity they have to counter these very serious threats. And the competition is really heating up. For the first time in a decade, a serious challenger has stepped into the ring. United Airlines is going all in, aggressively expanding its premium cabins and directly targeting Delta's most profitable customers. This isn't just regular competition, it's a full-blown premium arms race for those high-paying travelers. So how is Delta fighting back? Well, it's a three-part plan.
First, they're undertaking a massive fleet renewal, bringing in dozens of new, super fuel-efficient jets to slash their costs. Second, they're pushing that golden goose, the Amex partnership, to a staggering $10 billion a year. And third, they're going after that last slice of corporate travel that still hasn't come back since the pandemic. But even with a really solid game plan, the headwinds they're flying into are just fierce. You've got the $400 million fuel shock. You've got the risk of a recession, which always hits premium travel first. You've got that $500 million pilot contract looming. And on top of all that, you have government constraints like air traffic controller shortages that physically limit how much they can even grow. And all of this, all of it, comes to a head on April 8th. That's the day of the company's first quarter earnings call. It is going to be a moment of truth. The entire industry is watching, and really, it all boils down to just a few critical questions. First things first, can they just raise their ticket prices enough to cover that huge fuel bill without chasing away customers? Number two, are those premium travelers going to keep buying expensive seats if the economy starts to look shaky? And number three, the big one for Wall Street, will they stick by their very optimistic earnings forecast for the rest of the year? And finally, everyone's looking at their unique assets. Is that Amex loyalty engine still firing, or is consumer spending starting to slow down? And the big wild card, how much is that oil refinery they own, the only airline to do so? How much is it actually saving them right now, with fuel prices this high? That could be their secret ace in the hole. Which leaves us with the one ultimate question. Delta spent an entire decade building the most powerful, most profitable airline fortress in the world. But now, the storm, geopolitical, economic, and competitive, is here. The question isn't about how high Delta can fly anymore. It's about whether that fortress is strong enough to withstand the turbulence that's dead ahead. And the answer is going to define not just Delta's future, but probably the future of the entire